All right, I want to do a real quick recording about the debt ceiling topic that's going to be taking over the news wire literally for the next 6 months, probably, because I don't think they're going to reach a resolution until the final hour. Because unfortunately, the shutting down of the government, flirting with national debt default is becoming a political bargaining chip that both sides of the aisle are using very, very liberally. But I've gotten multiple text messages, multiple phone calls where people are concerned. Is this going to lend itself to a financial meltdown? Is this going to be a financial catastrophe? And I'm going to be a voice of reason right now and hopefully give you guys a little bit of peace of mind that this is honestly very low on my list of things to be concerned about this year economically. I'm more concerned about the housing market getting cut down by the knees. I'm more concerned about people losing their jobs. I think the unemployment rate is going to go up, and jobs and real estate prices, in my opinion, have a bigger impact on the stock market and the overall economy than politicians politicking around the national debt ceiling and if we need to increase it. So, anyways, let me give you some facts. And this is directly from Treasury.gov's website. They actually have a pretty good looking website that kind of articulates um, the problem that we're facing right now. So, the biggest problem is we've got $31 trillion of debt. And I'm going to show you in a second. I think most of you know my politics. But this is not a left wing, right wing issue. This has been at the helm and at the hands of people who consider themselves staunch conservatives and people who look at themselves as more progressive liberals. Both sides of the aisle are to blame for a national debt of darn near 31 and a half trillion. Of course, we've already actually hit the debt ceiling theoretically, but what the Federal Reserve is telling us, the federal government is telling us, is we can basically shift money around the balance sheet. Where we really are going to run into issues is sometime in June. And at that point in time, economists are saying we're not going to have enough money to pay people who own our debt. So let's go into this real quickly. All right, so this is just explaining. If anyone needs help explaining how you get into debt, the Federal Reserve will help explain. You have more expenses than you have revenue, therefore you need to borrow money to continue to sustain. We all should have learned that in Economics 101 and maybe grammar school. They should be teaching that philosophy. Even my son knows he can't afford Legos unless he has more money. The government is spending money like children. All right, so check it out. This shows you the trajectory of our national debt going back all the way to 1921. You can see it spiked here during World War II. And then we had like decades upon decades of a pretty much a level debt. We didn't spend money we didn't have up until the mid 1980s, where you can see it just started shooting right up. And this is where I say, hey, think of the different presidential. Everyone likes to call the head, the president, is the guy who basically is the cause for everything, even though there's lots of other cheeks and seats in Washington. But if we want to choke, one throat, you've got Reagan, you've got George Bush, you've got George W. Bush, you've got Bill Clinton, you've got Obama, you've got Trump, you've got Joe Biden now. Every single one of these darn presidents were at the helm during this massive spike of our federal debt. Literally in 1982, which I'm going to age myself, that's when I was born. And I know, age shaming is all the rage, but I'm 40 now, so you can't make fun of me too much longer, I don't think. We were at $3 trillion in total debt, and it's just spiked up all the way to where we stand right now, $31.5 trillion. Now, what really matters is what is the percentage of debt to GDP, right? This has been the debate forever, and it was, a real stressor right at the end of World War II. If you remember, you have pinup girls and war heroes selling war bonds, going door to door to raise more capital to finance the wars in World War II. So you can see back at the end of World War II, our federal debt represented about close to 100% of our GDP. And then when we had times of peace, like we've kind of had in America for the last several decades, I know you can probably mince what I just said, but in theory, we haven't had a world war in the last several decades. So the reason for this spike in our debt as it pertains to GDP is inexcusable, in my opinion. But you can see in times of peace, we started paying the debt off, and it represented a smaller percentage of our GDP. So you can see here, right, at its low in 1981, it was only about 32% of our GDP. So to give you a case in point, that would be like, hey, I have a household income of $100,000, and our mortgage is $32,000. We owe $32,000, but our household income is $100,000. So if I looked at it as a consumer, I'd say, well, that's pretty bite-sized. Fast forward to today, our federal debt is over 125% of our GDP. So case in point, now we owe $125,000 on our mortgage, and our household income is $100,000. Now, here's why I'm less concerned than some of the talking heads in the media are when they're scaring you into thinking that we're going to default on our debt. It's going to be the financial crisis on steroids or the Great Depression, and all of our money in banks is going to be unsafe, and carry on and on. Fear sells in the media. So, a good portion of our federal debt is owned what they call intergovernmentally. This is the Federal Reserve, right? So the Federal Reserve owns close to $7 trillion of our bonds. Now, debt held by the public, right? These are mom and pop consumers. These are banks. These are mutual funds. These are insurance companies. These are, other nations. So a lot of people think China owns all of our debt. Actually, Japan owns more than our debt. China has actually stopped buying our debt, but China is one of the largest nations who own our debt out there. But this $24 trillion, these are actual mom and pop investors and banks and financial institutions in other countries. But this $7 trillion, which is about 20% of our federal debt, is essentially we took money out of our right pocket and put it in our left pocket. Right? Because that's what money printing is. When the Federal Reserve enters the government auctions for debt and starts buying up debt, basically our own government owns 20% of our debt. So naturally, if we ran up on this debt ceiling and we went till the final hour where we go, hey, we got no more money to pay people, in 2011, we had this very same issue happen. And they already laid the groundwork for how they would prioritize who gets paid and who doesn't get paid. Guess who the government is not going to pay interest to? They're going to not pay interest to themselves, right? And life will go on when 20% of the federal deficit doesn't need to be paid on, and the other 80% will continue to pay like clockwork. That enables us to kick the can down the road substantially longer. Like, I don't know the exact number, but I got to believe another year or two, perhaps. So the idea that in June we're not going to have enough money to pay our debt, I think is fear-mongering. Unfortunately, I also don't think we should flirt with this. Right? I don't think that this should be a political pawn in the game of negotiations. Now, I do understand what the Republicans are saying. The Republicans are saying, hey, we're running up on the debt ceiling again. Great opportunity for us to look at the budget. Great opportunity for us to, reach a deal. And Joe Biden is saying, no, I'm not negotiating. You raise the federal debt ceiling because that's just what we do as Americans. Raise it. We don't use this as a negotiation tool. I think it's never a bad time to look at our budget, especially when you look at the percentage of GDP our deficit currently represents. Right? And ultimately, what needs to happen if we want to stop flirting with the debt ceiling that we keep raising and raising and raising, we need to have some more austere measures put into place in Washington. And there's been no willingness on the left or the right to make these difficult decisions because austerity stinks. Anyone who's paid credit card debt off or paid their mortgage off or put their kids through college recognizes that you need to start prioritizing needs and wants. So right now, the prioritization of those needs and wants is becoming a political bargaining chip. And Joe Biden's take is we don't negotiate. We raise the debt ceiling because we don't flirt with economic disaster. And Kevin McCarthy is saying, no, we want to negotiate. And I guess they're getting together tomorrow, so we'll see what comes of it. I do not think we are going to flirt with it. And even if we do flirt with it, we already have the rails laid out to prioritize who gets paid. And naturally, we'll just pay mom and pop consumers and banks and insurance companies and mutual fund holders and international bond holders rather than the Federal Reserve. Anything else on here? This talks about the actual interest rate. The average interest rate on the 31 trillion is only about 2%, right? However, right, 2% of 30 trillion, that's about like for every dollar you pay in taxes, about 25% of that dollar goes towards the debt service payment, right? The interest rate that we have to pay. So it's nothing to scoff at. The debt ceiling. I'll finally leave you with this. This is right on the Treasury's website, which is kind of interesting. It's a Benjamin Franklin quote that says, "I'd rather go to bed without dinner than rise the debt." Well, why don't y'all eat your own cooking? Everyone in Washington. I'd rather go to bed without dinner than rise the dead as well, too. And here's one from Alexander Hamilton, who, of course, was responsible for creating the Federal Reserve System and enabling all the nations to come together in order to improve our credit rating and such. But you guys could read books about the founding fathers here. Thank you for tuning in. If you got any questions, please lean into us. And again, I'm not trying to paint a rosy picture. I think it's going to be a tremendously challenging year in the capital markets and more so economically. I think people are going to be losing their jobs. I think people's home values are going to be dropping. But I think the idea of us reaching the debt ceiling and the United States defaulting on its debt should be very low on your concern list. There is so much more to concern about than this particular item. But the media is going to latch onto it. They're going to twist the knife. They're going to fearmonger. They're going to do what the media does. 80% of headlines are negative in nature because it gets you to click and it gets you to read. So they're going to continue to beat this drum until June as we reach that final cliff when we have to start prioritizing who we pay and who we don't pay. Anyways, hopefully this was helpful.